All right. So let's chew on all this. Douglas Holtz-Eakin is here, American Action Forum, the best CBO director in American history. And Marc Sumerlin, Evenflow macro managing partner and a former deputy of the White House National Economic Council. How about that? All right, gentlemen, I only exaggerate a little. That's all. Let me start with the $156 million. This is Grover Norquist's friend. I'll fish his name out. John Karch. I want to give John Karch credit on the air. Anyway, the Gallup poll, which moves around, but basically 58%. That number sometimes goes to 60%, but that's who says own stocks. So when you run through the numbers, 269.7 million adults, 58% of that gives you 156.4 million. Okay, Marc Sumerlin, I'll start with you. I'm just saying that a bullish stock market, it's not only a good thing, and it's not only emblematic of a good economy and a good future economy, but it actually affects a lot of people. Now, I know the pied-à-terre crowd in New York, the richest of the rich, may own the biggest numbers, but everybody owns a piece of the rock. I mean, it's a big number, Mark. That's the only point I'm making. Everybody seems to own a piece of the rock.
No, that's a great point, Larry. I mean, I think the one thing we want about capitalism is we want as many owners of wealth as we can get.
Right.
And the more that we can have, the more broader that people are going to benefit from this incredible engine that we have. I wish, back when Doug and I were in the White House, we tried to do some private personal accounts and Social Security. The returns would have been incredible for that. Had we done that, we would have a lot less problems now. And we're just in the middle of an absolute profit boom. And so we need to have as many people as possible to be sharing in this.
Yeah, wonderful. And go ahead, please, go ahead.
I want to point out one particular stock that I think is really interesting that people are missing. Since the middle of July, Manpower is up by 50%, the stock price. And Manpower is a staffing company, and it signals a turn in the labor market. And so I think we're going to get to the point where we've had an investment boom. And if the Manpower stock price is correct, we might be at the threshold where we're about to turn into a broader growth in jobs. It would be terrific.
Marc Sumerlin, you're a very clever chap. That is a great point, and I appreciate it a lot. Doug Holtz-Eakin, that makes following on what Mark's point, piece of the rock, that makes these Trump accounts even more important. The possibility that we could, I don't know, we could sign up another 10 or 20 million people. I don't know what the exact numbers is. But this, I want everybody to share in this prosperity. Now, I know darn well that the wealthiest own the biggest chunk of it. I understand that. Sure. But a lot of people try to slough off the stock market. Lefties hate the stock market. Socialists hate the stock market because they can't control it. Ordinary middle-class working folks are part of the participants in the stock market, Doug. I should have put it in the riff just that way. Ordinary working folks are participants in the stock market. You couldn't get 156 million without that.
Absolutely correct. So first of all, I want to give you credit for what I think is the first on-air pre-buttal of a fact check. So thank you for laying that all out.
Yes, sir. Yes, sir.
Number two, it is important to emphasize things like pension holdings. That's a real part of economic security and the standard of living in the United States. The stock market affects that. Most stories about the stock market skip that and go straight to direct holdings by the affluent. So I think that's important.
That's right.
And the Trump accounts, I think it's very little appreciated that they are equity investments. This isn't treasuries in an IRA. This is a very different animal, and it's one of the things that's, I think, going to be most interesting about it. There was one other time when we allowed equity investments in a government-related savings vehicle. It was the Railroad Retirement Fund, and despite the fact that it had to weather the great financial crisis and everything else, that return has been much greater than any other comparable government pension plan.
Good point.
There's a lesson there.
That's a very good point. And, coming back, Mark, your point, George W. Bush would have loved to have had that reform, putting personal accounts into the into the Social Security system one way or another. He was absolutely right. I remember talking to him about it, and I know everybody scoffs at it and they jump up and down. Nobody wants to touch Social Security. People would be a lot wealthier today And by the by, seniors would have been a lot wealthier today because it's done so well in the long run. Sometimes you take your lumps. We've had bad downturns, but it always comes back way, way above because of American free market capitalism, as long as we keep the socialists out. Doug Holtz-Eakin, what do you think of these inflation numbers? June, July, basically flat, even down a bit. The game's not over. I mean, we're still a ways from the 2%, but it's a good start. I mean, I think Warsh deserves some credit for the target, number one. He doesn't let up. Number two, ending forward guidance. And number three, keeping a cool head. All right. I mean, maybe keeping the rates flat where they are. What is it, 3.5 to 3/4, the target rate, that's restraint enough.
So, I can't find joy in anything. So here's my concern with the numbers. If you use the core PCE price index, the Fed's preferred numbers, as the measure, in December of 2022, it was at like 4.9%. By 2023, it's 3.1. But in December 2024, 3. December 2025, 3. Where is it now? 3. That's the Fed challenge. That's what Warsh is taking on. Can you get the core trend back to 2 where it belongs, and what policies will do that? It's not leaning against what happened after the invasion of Iran. It is about that long-term performance and the Fed's credibility being impaired by it. So if you're comfortable with that being restrictive, you leave it where it is and you get back to 2. That's the call they have to make, and he's trying to educate people on that.
Well, July to July, just looking at yesterday's numbers, CPI, 2.5. That's the core. Now, there's still a little bit to go. Marc Sumerlin, I don't know. My hunch is the market rates, which have gone up somewhat, they've gone up and they've come down, but they are higher than they were a year ago. They're probably enough restraint. But I don't know that. I just have sense that Kevin Warsh will keep his promise. And if he has to raise the rates, shrink the balance sheet, he will do it, Mark. I mean, I think he wants to wait, and I think he's right to wait. Yeah. But if he has to do it, let's say the three of us are having this conversation in 3 months or 4 months, and we're still at 2.5 plus, I'm going to call it. I mean, I'm sure Warsh will take action, don't you think? You know him. You guys worked with him. I know him personally for I don't know how many years. He means what he says.
I 100%. I agree. He will do the right thing, and he'll do what's right for the country. Yep. I think on inflation, I'm going to agree with both of y'all. I think it's running about 3% now, which is a little high for me. When I look at the best predictor for where it's going to be 2 years out, that's unit labor costs, and that's running about 1.5%. And so I think it's going to work out. The other thing that we're seeing now, what's really interesting, is token prices are starting to deflate. Token prices are the power for AI. They're deflating at the same rate that oil did as shale came on. And so we're starting to see the normal capitalist economy cycle where you eventually prices will start to go down and you'll get some benefits. Look, I'm in a little bit different camp where I think because we have a little bit of wood to chop right now, I'm in the one hike camp. I know you don't like that.
Listen, but, if it has to,
Kevin will figure it out. Yeah.
Right. That stuff's not the end of the world. If we're going to sit around and worry about, go ahead, Dougie. But if we were about 25%, 25 basis points, so what?
I just think that, I think where Mark is, and I want to check if I'm right, is that last summer we cut too much. It's not that something's happened that we have to react to. It's that we're just not restrictive enough, and he'd prefer to see it more restrictive all along. Is that about right?
I think, I don't know. I know he wants the monetary base, AKA the balance sheet, to come lower. All right, it's about $6.5 trillion, whatever it is, $6.7 trillion. He'd probably like to have it over time come lower. I would like to have it come lower. Keep a rate on the money supply, which is a little rising a little bit if any of that stuff matters. But we'll see. All I know is right now, this is prosperity. And I love that manpower point. That manpower thing is predicting a good jobs report, up forward in the next year. And the stock market is telling us we got a good prosperity. And the whole story, fellas, is I don't think we need socialism. I don't think we need communism. We don't even need a dose of communism. We don't even need a dose of a senators who believe in communism. How about those apples? Douglas Holtz-Eakin and Marc Sumerlin, two very smart people. Thank you, gentlemen. Appreciate it.